Welcome back to the channel. Today we are diving deep into Amazon's latest earnings report and future projections. With shifting analyst sentiment and a critical look at EPS trends, there's a lot for AMZN investors to digest. Before we break down the charts, please like this video and subscribe to the channel for more institutional-grade market analysis. Let's get into the data. We begin with a look at Amazon's current market standing on the NASDAQ. As of the latest reporting, AMZN is trading at $197.92. We see a slight downward movement of 0.84% in early trading, following a previous close near $200. The 52-week range is particularly revealing, showing a spread from $161 up to $258. This current price positioning suggests the stock is sitting in a middle ground relative to its yearly highs. The volume of over 200,000 shares highlights the significant liquidity and active interest in the common stock. This overview sets the stage for our deeper dive into the fundamentals. Understanding the current price action is vital as we analyze the underlying earnings data that will likely drive the next leg of movement within that 52-week range. As a NASDAQ 100 leader, Amazon's performance here often dictates broader market sentiment. Turning to the earnings per share chart, we see a track record of consistent performance through the first 3 quarters of 2025. The dark blue bars represent estimated EPS, while the light blue bars show the actual reported figures. Amazon achieved definitive beat results in Q1, Q2, and Q3 of 2025. However, the fourth quarter shows a shift, with reported EPS at 1.95 against an estimate of 1.98. This slight miss in Q4 contrasts with the momentum seen earlier in the year. Looking forward into 2026, the projections are ambitious. Analysts have set a trajectory starting with a significant estimate for the first quarter and climbing toward a high of nearly $3 by the fourth quarter of 2026. This forecasted ramp-up suggests that the market expects Amazon to re-accelerate its earnings power after the slight Q4 pause. The contrast between the 2025 beats and the rising 2026 bars indicates a pivotal moment for the company's profitability narrative as it scales its diverse business segments. The earnings surprise table quantifies exactly how Amazon has performed relative to expectations. For the quarter ending December 2025, the reported EPS of 1.95 missed the consensus forecast of 1.98 by a margin of negative 1.52%. This minor disappointment follows a very strong year. In June and September of 2025, Amazon delivered massive surprises of over 26% and 23% respectively. The March quarter was also strong with a 17.78% surprise. These figures highlight the beat and raise cycle that fueled the stock for much of the year. The slight miss in December is a notable change in pattern that investors are closely watching. It's important to note that while it was a miss, the magnitude was small, suggesting a stabilization rather than a sharp decline. However, after 3 massive beats, even a minor miss can cause a shift in analyst models and investor sentiment as we head into the new fiscal year. Looking ahead to the quarterly earnings forecast, we see a more cautious tone among analysts for the first half of 2026. For the March quarter, the consensus EPS forecast is 1.69. The revision data is particularly telling. In the last 4 weeks, 8 analysts have revised their estimates downward, while only 3 have moved them up. This downward pressure continues into June and September, with more downward revisions than upward ones in both quarters. However, the outlook brightens toward the end of the year, with 6 upward revisions for the December 2026 quarter. This suggests that while analysts are tempering their near-term expectations, they still see a path to stronger performance by year-end. The wide spread between the high EPS forecast of 2.73 and the low of 1.46 for the March quarter shows a lack of clear consensus and a high degree of uncertainty regarding Amazon's near-term margin performance and consumer spending trends. The long-term yearly earnings forecast paints a picture of steady growth despite some near-term skepticism. For the fiscal year ending December 2026, the consensus EPS is 7.78, with 10 downward revisions over the last month against only 4 upward moves, Despite this current cooling of sentiment, the multi-year projections show a definitive upward march. The forecast rises to 9.27 in 2027, 11.55 in 2028, and 13.36 by 2029. This represents a significant scaling of earnings over the next 4 years. While the number of analysts providing these long-term estimates naturally decreases, the trajectory remains bullish for the patient investor. The high-end estimate for 2026 of 8.78 suggests that some analysts still see room for significant outperformance. This yearly data suggests that while the market is adjusting to immediate headwinds, the fundamental belief in Amazon's ability to compound its earnings over a multi-year horizon remains very much intact for the coming decade. The change in consensus chart visually tracks the recent cooling of analyst sentiment. Comparing the data from 1 month ago to the current estimates, we can see a slight downward migration in the bars for both the full fiscal year 2026 and the March 2026 quarter. This negative estimate momentum is a direct result of the revisions we discussed in the forecast tables. While the decrease isn't drastic, the visual step down is a clear indicator that professional analysts are being more conservative with their models. This often happens after a period of high performance or when macroeconomic concerns such as shipping costs or consumer demand begin to weigh on projections. For investors, this chart is a warning sign to watch for. If the consensus continues to drift lower, it can create a headwind for the stock price. However, if the company can deliver another surprise beat in the next report, we would expect to see these bars reverse course and move back toward their previous highs. The Estimate Momentum Text Summary provides a precise breakdown of these sentiment shifts. For the fiscal quarter ending March 2026, the consensus EPS forecast actually increased slightly over the past week from 1.68 to 1.69, though it has decreased over the past month from 1.7. This suggests a very recent stabilization. However, the yearly outlook for December 2026 has seen a more sustained decline, dropping from 7.83 to 7.78 over the past week and down from 7.87 a month ago. Out of the 14 analysts making these yearly forecasts, only 4 raised their targets while 10 lowered them. This 10-to-4 ratio is a strong signal of caution. Estimate momentum is often a leading indicator for stock prices, and this current trend suggests that the smart money is currently de-risking their Amazon positions. These fractional changes in EPS forecasts may seem small, but when applied across Amazon's billions of shares, they represent significant shifts in valuation and expected market capitalization. Finally, we look at the raw number of estimates changed to confirm the breadth of this analyst shift. The data is heavily skewed toward the downside. For the March 2026 quarter, 8 analysts moved their targets down while only 3 moved them up. For the full 2026 fiscal year, the conviction to the downside is even stronger, with 10 downward revisions against only 4 upward moves. This concentration of downward revisions across 18 total estimates indicates a broad consensus of caution. When the majority of analysts covering a major stock like Amazon are lowering their bars simultaneously, it creates a challenging environment for stock price appreciation in the immediate term. This unanimous lean toward the downside suggests that analysts are collectively pricing in a more difficult operating environment for the company. For investors, this tally serves as a final confirmation of the current wait-and-see approach being taken by the professional community as they look toward Amazon's performance in the 2026 fiscal year. In conclusion, Amazon's latest data presents a mixed but predominantly cautious picture. While the company has a strong history of beats, the recent Q4 miss and the wave of downward analyst revisions for 2026 suggest a period of transition and adjustment. However, the long-term forecast still points towards significant earnings growth over the next 4 years. The current estimate momentum is a headwind, but for the patient investor, the fundamental story remains one of scale and potential. Thank you for joining us for this in-depth breakdown of AMZN. Don't forget to like, subscribe, and hit the notification bell so you never miss a market update. We'll see you in the next analysis.